Hey everyone, today is Tuesday, August 4th, and we're checking in on the overall markets. So right here we have SPY, the S&P 500 ETF. As you can see, we're closing strong. We're approaching the 330 level. There's still a gap to fill up here at 332. Personally, I've drawn this long-term resistance line, and you can see here we've rejected more than a few times now, and we're closing right on that resistance line. Bulls would love to see it close above, but definitely closing strong. So I would say the chances of filling the gap on SPY are quite high at this point. So again, 332 is the gap fill that we're watching. One thing to note, again, this resistance line is definitely a bit of a red flag for me. Another red flag would be the decreasing volume here on the daily time frame, which is not, surprising. We're going into the summer, so volume tends to drop off. People, they've been cooped up in their house during this pandemic, so people are starting to go out and camping more, just experiencing the outdoors. Another thing worth noting is the monthly time frame here. You can see that we have quite a similar pattern to what happened about a year ago. But just before I drop into that, you can see here we have a monthly RSI downtrend line that we are approaching now. So this is what you call bearish RSI divergence. So when the price is going up, but the RSI is trending down with lower highs and lower lows. Definitely something I'm keeping an eye on as well. And as you can see, the monthly volume is dropping off here as well. So in the rectangles here, if you take a look at this, again, this is the monthly time frame. So every candle is a depiction of 1 month's worth of trading. So here, if you look back in February of 2019 and January, when we had this huge sell-off, you can see here, it's very similar to the action that we're seeing here now from the COVID dump. So this candle, starting from this candle to here, where we started to pull back, they look quite similar. Even the volume's identical. You can see here we had a slow drop off, a little uptick, and then another drop off into May, which is into the summer. So it could be, history doesn't always repeat, but it could certainly be rhyming, and this isn't, something that I'm ruling out. So it's definitely something I'm watching. Has me a little cautious up here. You can see it's been 3 years since SPY had 3 monthly candles close bullish. 4 candles close bullish in a row. So we're now on the 5th month from the COVID dump. So I would definitely be cautious up here. Generally, when we see such a huge, massive bounce from the lows, we hit 218, now testing the all-time high. Just absolute crazy monster run. I mean, you're looking at 45% on the S&P 500 in 4 months, which is just absolutely astonishing. So generally, what we would expect to see is an equilibrium, and an equilibrium would look something like this. So you have your dip, you come up here to the high, and then another higher low to stay in that tightening range. So we're not out of the woods yet. There's so many catalysts, short term and long term, but in the short term, we're looking at the stimulus bill. The Democrats and the Republicans are having, some back and forth discussions. They're not able to reach a deal, and some are in agreement with the unemployment, the extra $600 that ended on July 31st. But they said that it could be another 2 weeks before they reach a deal on that. So this is what I'm paying attention to, is this monthly lower high and a potential equilibrium for a monthly higher low. So I'm personally refraining from any long-term trades at this point. So there we have it. We have SPY. Moving on, I'll just touch base on a couple other markets here. So we have oil. Oil has experienced a nice bounce here over the last few days. That was due to the oil inventory report being better than expected. So oil, we're looking here now, it's trying to change the daily trend. So we were in a daily downtrend, and now we're testing the highs, and we're going to look to form a daily higher low and higher high, and then that will confirm the daily trend change. QQQ, so this is the technology sector. Absolutely rocket fuel the last couple of months. As we know, tech is the talk of the town. Again, guys, just be super cautious up here. I would personally not be going long on any tech names at this point. And one thing I can see in the short term as a bear catalyst that would negatively impact the technology sector would be the fact that we have all these China and US tensions. The software companies are under review, and Trump has said within the next couple of days we can expect to see some development with regards to the Chinese software companies. So expect some negative or you know, some retaliatory actions against China. China's also not very impressed with the US because of the TikTok deal that's going on. They're basically being taken over, and they're in talks with multiple big tech companies such as Microsoft to potentially get bought out. And that would probably be best case scenario for TikTok, seeing as how Trump is totally against it and wants to ban it completely. So if it was to be purchased by a US company, that would certainly stand to benefit the TikTok users. So QQQ on the monthly time frame, overbought. We look at the weekly time frame, overbought. We look at the daily time frame, and we're just starting to cool off the RSI. We're testing the all-time high. We hit a new all-time high today. Can the bulls continue to push higher? I think so. For how long? I'm not sure. There's much gas left in the tank. I'm not sure who's buying up here at these levels. Eventually, guys, we're going to run out of buyers. It's just the way the market works. I see people all the time say, well, this is different. You know, the Fed injected trillions of dollars. You know, I don't care. The fact is that markets are always going through cycles, and no matter what the Fed does, no matter, you know, how much money gets injected to the market to stimulate the market, we are always going to go through these euphoria and fear markets. And right now we are peak euphoria, in my opinion. We'll go over here. We'll check out the fear and greed index. Haven't checked that in a while. So if we take a look at the fear and greed index, we're sitting at 67. So it's not that bad. Again, I can definitely see us going up from here in the short term, especially to fill that gap on SPY. So SPY did close at 330, which is super bullish. So I would not be surprised to fill that gap tomorrow, all depending on, you know, news and things like that. We have some important earnings tonight. So Disney, there's a few other earnings that are important. We have Beyond Meat. It'll be interesting to see how they did. Disney, I'm expecting you know, a bearish reaction. Theme parks are closed. You know, who's going to the theme parks anyway when they did reopen? I would assume that the volume of people would have dropped off significantly. So other than that, I'm not going to touch base on too many other sectors. Those are the ones worth noting today. Gold, new all-time high, absolutely beast mode. $2017 US dollars an ounce, which is just absolutely incredible, the run that it's been on. You can see here Bitcoin also getting some love toward the end of the day based on how the overall broader markets closed. And I wouldn't be surprised if Bitcoin tests 11,500 overnight and potentially upwards of 12K, which it did see 12,100 on the recent move. So again, guys, that's the update for today. If you have any questions, please drop them in a comment below, and let's keep an eye out for potential clues and news catalysts. Obviously, COVID-19 rising cases is a concern. The stimulus bill and the inability to reach a decision there is looming over the market. The market really doesn't seem to care about any bad news at the moment. So as we know, things tend to, you know, slow grind up and waterfall down. So you always want to be on the edge of your seat. I personally would be refraining from going long anything at this point. If you're looking to get into the market and you're looking for a long and you want to park some money, you know, the US dollar's tanking. People are having less and less, you know, confidence in the US dollar, so they're looking for other places to park their money. Maybe you want to wait for a daily high or low on the market. So for example, on SPY, maybe you want to wait until we see a daily pullback right here to this support trend line. Maybe that's when you want to start buying the dips. So again, guys, have a game plan. If you have any questions or concerns, please post them down below and I'll do my best to get back to them as soon as possible. And have yourself a great rest of your day.